Welcome to the Rick Helps Real Estate Show, the weekly edition and the update on this channel where I show you what's going on in the Arizona real estate market. And not only will you be armed with information, but you will become a hit at all the cocktail parties. And Halloween's coming up next week, so this is your chance. You're going to hear somebody say, boy, there's a lot of listings in my neighborhood. And you're going to jump in and go, actually, there's 137, which is 34% below normal. And they will quietly walk away. So, but that's what you face when you know a lot of stuff. And here's some of the stuff that we're seeing right now. See those red lines? And if you're subscribed to my newsletter, you will get this tomorrow morning going into great detail. Those are caused because more inventory has come on the market. Our sales are flat, 2,600 every 7 days, 2,700 every 7 days. They ain't moving much. And so as inventory starts to creep up a little bit, these numbers turn red, which means that there's a bigger gap between supply and demand. And so the biggest hit was Scottsdale at 6% and Avondale at 7%. Maricopa is still down the bottom here at 46.4. And this is a culprit right here. You can see that listings went up just a little bit. Now, I can say with extreme confidence that starting next week, we're going to start coming down. Because the closer we start getting to Thanksgiving, the less people are apt to either renew their expired listing or put their listing on before the holidays. So we're going to creep down. Those red numbers you see are going to turn green, not because buying activity has spiked up, but simply because buying activity has stayed where it was. And there's fewer homes on the market. It's just an indicator, sort of a barometer per se. Here's an interesting one. We haven't looked at it a long time because there hasn't really been any reason to look at it. And that is closings over list price. And you can see that it's really only happening in a couple price ranges, 300 to 500,000. And the number between 3 and 400,000, 20.6% of them are going for over asking price. But then you drill down further, it's only about $5,000. So what's happening there is that people are offering a little bit more for the asking price so that they can ask for some concessions. So the closing price comes in $5,000 higher than where they were. They probably kicked in a little bit of mortgage rate buy down, maybe some closing cost contributions, but that's what we're seeing. Now, the average cumulated days on market right here is up to 86.22 days, up from 84.54. So that just means historically, it's pretty slow out there. If you take a look at where we've been years past, it's just plogging along. This is where most of the chatter is going to start coming. They'll really grab onto it in the doom and gloom channels. I just like to look at where the numbers are, tell you what I see. I'm not someone that's going to tell you what next year is going to be like. I mean, look, if I was the Treasury Secretary, this country would be in big trouble, but I'm not. So, but I can tell you what I see, and you can look at the same numbers and draw your own conclusions. But these are right here, trustee deeds by month. And the different colors here are, this blue is, it just disappeared on me, sold to a third party, which means an investor probably bought it. And the orange means it went back to the bank, the beneficiary. So you can see they've gone up. And they've gone up because we've been, excuse me, kicking the can down the road for a long time. And you can see here that total number of pre-foreclosures, notice of trustee sales, is still only 398, not anywhere near what we saw in years past. If you get down here to 2013, that's as far as this chart's taking us right now, I believe. Let me see if I can change it. No, let's go back to 2010. Why am I coughing? 11 and 12. See what's going on here. Look at that. 2,300. And what did I say we were at? 300. So we're not there. 398. They are going up. Why are they going up? Well, you know, we haven't been in a financial situation like this at all where we offered people forbearance during COVID. So the forbearance is starting to roll off, expire. People have to make a decision. I'm either going to refinance, I'm going to sell, or I'm going to end up handing it back to the bank, depending on how upside down they are. And so that's starting to show up now. It's not showing up at an alarming number that makes you go, oh my goodness. But I'll tell you what, investors are lined up for these. If you think you're going to go in and grab a good deal on a foreclosure, That's a very competitive market. Even if it triples at this point, investors are out there ready to go. They are cash rich. I get text messages every morning. Rick, you got any distressed sales for me? Every day, not just one, 2 to 3 a day. And my answer is, well, nope, I don't. Here we are looking at our mortgage rates. Good week for rates. If you're waiting for them to go down, they went down to 6.19, and it was trending what they call here positive. So that's where we're at with mortgage rates. Here is our months of supply. And again, they consider average month's supply between 4 and 6, and that's where we're sitting. We're in a pretty good balanced market, and buyers are finding a much easier time getting a home now than they certainly did the year before last. Not last year, because we're almost right there with last year's numbers, except we're down about 15% in prices compared to the peak that we hit in 2022 in the price range between 300,000 and 800,000. Anything above that, it's staying pretty steady, flat to growing. Here is the listing success rate the last 90 days. You listed it. Did you get it sold? 88.9% of Youngtown people found themselves getting a contract. Sun City West, 79%. Sun Lake, 77%. If you want to know the listing success rate in your zip code, use this QR code above me or click the link below and I'll send it out to you along with all kinds of other goodies. You look here and see Gilbert, 74.2. Chandler, 72.6. Those are a little bit lower than I would have anticipated. Who's the bottom feeder in this area here? Let's go way down. It is Congress and Superior. Arlington, I don't even know where Arlington is. Queen Valley, Rio Verde. So they're less than half of their homes are getting a contract. Makes it kind of tough. Now, we've got a Fed meeting coming up. The betting people are saying they're going to go down another 1/4 of a point. That's probably true, but that's already been baked in the cake. You've heard me say that before. So we're down to 6.19. If they come out and announce they're going down 0.25, we might go to 6.25 and then settle back down to 6.19 again. So stay close to your lender. They're the ones watching the bond market, watching the fluctuations. That's where mortgage rates are set, not by the central bank. They've got a big job ahead of them trying to figure out how to get inflation down and not kill jobs. They've got 2 mandates. I wish they only had one. I wish their only mandate was was keeping the dollar strong. And I wish they'd stay out of the job market and leave that up to Congress. Not that Congress is any better, but that's just my personal opinion. Let me know what you think. But it's going to be an interesting meeting, see how things shake out. That's really the only thing that's coming this week because we still have a government shutdown. We're not getting any data. We got some CPI numbers. The jobs data we get will be coming from a private company called ADP, which is payroll, which quite honestly is probably better than the government. They do it with a survey. They fax you a survey. Hey, what do you think? Honey, get the fax machine. We got to answer the government. So we're not really missing that too much, but I think the bond traders are kind of wishing they could chew on something. And so the lack of data means everybody, buyers, sellers, everybody's sitting on their hands. Now, I did a video the other day about no bidding wars, and my point was that if we get a big reduction in interest rates and if it brings out buyers, sellers will start hearing, oh, homes are starting to sell a little bit more. We had 24,000 canceled and expireds this year. They're going to go, well, let's give it another try. Let me put this on there. So I think if we start seeing sales increasing, we're going to start seeing listings increasing at the same time. So the gap between the two will remain the same and we'll be right where we're at today. So those have to change. You have to have more buyers than sellers for bidding wars to crop up. So when you start hearing on social media, realtors saying, look, hey, when rates go down, we could end up in bidding war territory. Just do that math and say, okay, does that make sense? We got 4.1 months of supply right now. Are we going to go to 2? Are we going to go to a half a month like we did in 2021 when everybody was overbidding on houses? Do we really think that's going to happen? I don't. I don't think you do either. And so if somebody's telling you that, be sure and ask the question, what are you basing that on? Because I just don't see it. But anyway, do me a favor, click the link below, sign up for my newsletter. You'll get it tomorrow morning at 7 o'clock. If you have any questions, shoot me an email at rick@rickhelps.com. Take care.